The major real estate and housing news dominating headlines today, March 15, 2026, centers on bipartisan efforts to tackle the ongoing affordability crisis and high home prices in the U.S. The Senate recently passed the 21st Century Road to Housing Act, or a similar sweeping bipartisan housing bill, with overwhelming support 89-10 vote, marking one of the largest housing reforms in decades. This legislation includes provisions to ban large institutional investors, specifically those owning 350 or more single-family homes, from purchasing additional single-family properties. The goal is to reduce competition from big Wall Street firms and corporations, freeing up more homes for individual families and first-time buyers amid a severe national housing shortage, estimated at 4.7 million units per Zillow data. President Trump has taken a parallel but distinct approach, signing executive orders earlier in 2026 focused on deregulation to spur construction and supply, while also restricting institutional purchases of single-family homes to prioritize Main Street buyers over corporate investors. These moves reflect growing political consensus that institutional buying has exacerbated affordability issues. Though experts debate its impact, some analyses, like from Realtor.com, note that large investors account for only about 1% of purchases nationwide, and their activity has declined since 2021 peaks. Banning them might not dramatically boost supply but could symbolically shift the market toward individuals. Meanwhile, mortgage rates are fluctuating amid broader economic pressures, including geopolitical instability. Mid-March 2026 30-year fixed rates have climbed back above 6%, around 6.11%, or higher in recent reports, after briefly dipping below that threshold earlier in the year due to prior declines. This uptick is tied to concerns over inflation, global events, and treasury yields. Inventory continues to improve gradually. Active listings and new listings are up year-over-year in many areas. Surges in new listings signaling sellers entering the market, creating more options for buyers compared to recent tight supply years. Home prices show signs of moderation, with forecasts for flat or slight declines in some markets in 2026, though affordability remains challenged with median prices high relative to incomes. Overall implications: these policy actions could slowly ease pressure on first-time buyers and renters by curbing corporate dominance, but experts warn that true relief requires massive increases in housing construction and supply. Deregulation from the executive side aims to accelerate building, while the Senate bill focuses on demand-side restrictions. The market is tilting slightly more buyer-friendly with rising inventory, but elevated rates, now over 6%, and persistent shortages mean challenges persist, especially for younger buyers facing record-high price-to-income ratios. YouTube short script designed for reading aloud. Approx.